before an issue comes into the market. Then there is a drafting of prospectus. As I said, the prospectus, the red herring prospectus plays a very vital role in the IPO. Then IPO grading, it has to be done, the grading of the IPO has to be done to decide on what will be my cap and floor price of the in the book building process. Then statutory approvals, appointing the intermediaries, valuation and pricing, marketing strategy, arranging firm allotments, circulating quality research reports, printing and distribution of stationery, timings of the issue. So these are my pre-issue requirements. So the process is done prior to the IPO coming into the market. Then the marketing, yes, marketing plays a very important role, because unless the people are aware of your IPO, they are not going to participate. So how can I do the marketing? It can be done with a proper media strategy for wide publicity. It can be through road shows, it can be with the help of the press, the brokers, the analysts, one-to-one meets, analyst meets, then plant visits, then we can approach the NRI investors, the retail distribution, advertising campaign, positioning and marketing to institutional and retail investors. So these are the requirements as far as marketing of the IPO is concerned. Then once the marketing is done, once the people are aware, they start bidding for your IPO, and then the next process that comes in is the post issue. What is the post issue? It is definitely going to help me to discover the price. With the help of the bids that have come to my kitty, I am going to decide what is going to be my cutoff price. Finalizing the basis of allotment, documentation with the depositories, because when you have to get your shares listed and once you are going to allot the shares to the investors, it has to be in a demat form. Demat means dematerialization. So dematerialization is done through the depositories. The depositories in India are NSDL and CDSL. So there has to be a credit into the investors' accounts. Listing approval from the stock exchanges. Wherever I would like to get my IPO listed, I need to get a prior approval from the stock exchange. Then there is a post-issue research support for sustained coverage, and then the long-term value creation. So these are the various processes which we need to take into account in the book building process. Now what is the price band, friends? The price band is nothing but a range. Rather than giving a particular price, I am trying to give a range to my prospective applicants, right? To my applicants, I am giving a price band. The lower end of the price band is called a floor price, right? So there will be a floor price. That is a lower band, a lower range, right? And then there is a cap price, right friends? So the lower end of the price band is called as a floor price, and the higher end of the price band is called as a ceiling price or the cap price. So it is also termed as a ceiling price. That is the maximum my applicant can opt for. So that is the maximum bid which they can opt for. So this is the highest range, higher range in the price band. Okay. So floor price and the cap price are decided, and they are given to the they are disclosed to the applicants. The price band should not be more than 20%. The range between these two prices should not exceed 20%. So let's say if I am keeping my floor price at 100, my cap price will be 120. It cannot go beyond this. But yes, during the IPO period, I can change the range. I can go upwards or downwards. If I want to shift my floor price a little towards the higher end, I can go to 110 or 120, and simultaneously my ceiling will also change, because the range has to be just 20%. It cannot exceed 20%. Revision not to exceed 20% of the floor price. The revised price band to confirm the guidelines. But then definitely when I have to decide on a revision in my price band, I need to fulfill the guidelines as set by the SEBI. The next comes the cutoff price. As I said, there will be a lot of bids that are going to come in from the applicants, right? Some will have the floor price, some will have the ceiling price, some are going to bid in between, right? So there are going to be a lot of applications with different bidding amounts that are going to come to my book building process. and then on the basis of all the bids that have come in, I have to decide on the cutoff price. Now, what is the cutoff price? It is an option available only to the retail individual investors. So, the cutoff price is applicable only for the retail individual investors, and it is not meant for the HNIs as well as the QIIs or QIBs for that matter. So, willingness to accept the shares at any price in the price band, required to pay at the top end of the price band. So, now let us say they have, the applicant or the bidder has given a price of 110, he has bid for 110, but the cutoff price which I decide is 120, right. Now, let us say if I go in for 120 as my cutoff price, by default all the retail individual investors will have to take the allotment at the cutoff price only. They cannot say that we had bid for 110, so we should get the 110 as a price. No, it will be 120, which is a cutoff price that will be applicable to them. Obvious needs for calling balance money from the investors. Friends, now what happens is, as we said in the escrow money, escrow account, there is margin money available, right. So, the margin money will be, if I am saying the face value of the share is rupees 10, the application, on an application I must have called upon only for rupees 2. So, the balance 8 rupees, or let us say on allotment I am calling for rupees 4, the balance 4 rupee has to be called, right, from the people whom we have done the allotment, right. So, all that is done through the RTA, that is registrar and transfer agents do all these activities for the book building process. The cutoff price determined after the bids are closed, and the cutoff price prohibited for QIBs and the HNIs, as I have already said. Now, what is the bidding period, friends? The bidding period is a period during which the applicants can come up with their bids, right. The minimum 3 working days is the bidding period, which can go up to maximum 7 working days. And if I want, if let us say there are a lot of bids that are coming for my book build, for my IPO, I might extend it maximum for 3 more days, right, if the price band is revised. So, in between, if I am revising my price band, then I have to give some more time to the bidders to bid for my IPO. Now, revision of bids, yes, investors can definitely keep revising their bids. Now, let us say on the day 1, I go and give my application at one particular level, and on the other day I feel no, I have done a mistake of giving a lower level, I might not get the allotment, so let me revise my bid. So, he again goes to the bidder center, to the bidding center, and asks for another change or another revision in his bid. So, what the investors can do is they can revise their bids. The revision of quantity and the price is permitted. So, they can either change the number of shares which they have applied for, or they can change the price at which they are bidding for. The prescribed revision form has to be used by them. Unlimited revision permitted. I can n number of times during the bidding period, I can keep revising my bids. It should be done through the same bidding center. So, where I have applied for the first time, in the same bidding center I have to go to revise my bid also. To pay differential amount wherever it is needed. So, if I am increasing the bidding amount, I need to pay it, and if I am reducing my bidding amount, then whatever is excess will be repaid to you only after the allotment. It will not be done at the same time. So, now what is the basis of allotment, friends? The basis of allotment shall be proportionate for all categories, as we have already discussed. There is reservations for each category of investor. The allotment will be subject to the minimum lot size that is prescribed. Thereafter, the rounding off to the nearest integers can be done. Now, what do you mean by listing and admission of securities? As I said, once the book building process is complete, once the bidding, the cutoff price is decided, once the allotment is done, definitely the IPO has to be listed on a recognized stock exchange. Now, what do you mean by listing? Now, friends, listing is the process of admitting the security of the company to be traded on the floor of the stock exchange. It is nothing but from the primary market, I am moving to the secondary market. Going back to the features of the primary market. Now, what are the features of the primary market, friends? As we have already talked about it in length, let us at a gist, let us recap. The features of the primary market are, it is related with the new issues as we have discussed. It has no particular place. Today it is not confined to a particular place wherein I have to personally, physically be present to invest. It has various methods of floating the capital. The following are the methods of raising capital in the primary market. That is public issue, which we have already discussed. Private placement, as I said earlier, friends, now private placement is another way. That is through the QIP route, that is qualified institutional placements. So I can either go and offer, I can raise my capital through an IPO, or if I find it to be cumbersome, I find it to be expensive, I can take the second route, that is through a private placement, right? So this is said to be an easy method. Private placement is an easy method to raise capital, right, without undergoing any tedious formalities, right, and it is just, I will just approach few institutional investors and who are going to give their funds, who are going to invest their money in my company, right. So through a private placement, I am not approaching the public, I am just approaching few set of people, few set of institutional investors who would love to invest in my company. So that is the easy way of raising funds, right. So it makes my job easier and faster. The third option for me to raise capital, raise funds in the primary market is right issue. So already let's say I have done my IPO, I am already having a set of shareholders, right. So I have already approached the public and there is allotment done and now they are my shareholders. So these are my shareholders, right friends. Now these are my shareholders and let's say if I want to again raise some funds. Now I am going for modernization, or let's say I am starting with a new project and I need more funds. As I said, it can be through a private placement, but the third option for me is again approaching the same set of people, right. So what I am going to do is through a right issue. So what I say is, so what I am doing is again I am approaching the same set of people through a right issue. That is, I am giving them a right to get more shares of my company at a subsidized rate than what it is in the market, right. So this is a concessional rate which I am offering to my existing shareholders to get some more shareholding with me, right, and getting the money in my company. So these shareholders are again going to get some more shares in my company and they are going to invest their capital through the right issue. So rather than approaching a new set of people again and increase or diluting my control to a higher extent, I can approach the same set of people and get funds from them. That is done through a right issue. Then once the primary market job is done, once the shares are listed on a recognized stock exchange, they are available to be dealt in the secondary market. Now what is a secondary market? Now friends, the secondary market is that market in which the buying and selling of previously issued securities are done. Now what happens is, as I said, now these are my set of shareholders. They are already holding shares in my company, right. Now if they need liquidity, right, anyone who invests in the market, he is concerned about liquidity, because in case of any contingencies that come in case of any requirement, if he wants to liquidate his securities, liquidate his investments, there has to be a proper platform available where he can liquidate his investments and get his funds back, right friends. So what he is going to do is, now let's say these are the shareholders. Now there are few people or few shareholders who would like to sell their securities, who would like to liquidate their investments and get their funds back, right. So they are in need of funds, they need funds. Now when they need funds, they are going to liquidate their shareholding, and this can be done by selling off, so they are going to be selling their shareholding. Okay, and then there is another category of people. There are few other people who were not who had not participated at the time of the IPO, or who have not got the allotment, are now looking at the performance of the company, looking at the growth of the company, looking at the market performance, the price movements of the company. They feel that yes, this can be a better option to invest. So they are keen to buy the shares. So they are more keen to buy the company's shares. Right? So few people keen to sell, few people keen to buy. Now there has to be a transaction between these two category of investors, right? Now here what happens is, there has to be a platform available for them to come together and do the trade. So the trading that is going to be done between the two investors is done through the secondary market. So I hope you are clear as to what is a primary market and what is a secondary market. The primary market, the transaction, the trade happens between the issuer and the investor, right? But in case of a secondary market, the transaction happens only between the two investors. One who would like to sell, the other one who would like to buy. So the transaction, the trade that happens is between these two category of investors. But friend, very important is, they need to know where they can do the transaction, where they can trade, right? So for having a secondary market, an organized market for trading of these investors, we come across the stock exchanges. So stock exchanges actually provide the platform to these investors to come and do the trade, right? So buying and selling of securities of ABC Limited, right? So ABC Limited, who is now a public limited company, whose shares are listed on a recognized stock exchange. Now if these people are keen to do a trade for buying and selling of ABC Limited company's shares, they have to approach a broker. So there will be a broker who is given the authority, or who is given the right by a stock exchange to trade in the securities of ABC Limited, right? So broker is the one who has been recognized, he definitely has to get registered himself with the SEBI, and once he gets the approval, he can do a trade, he can do the trade on behalf of these two category of investors, right friends? So secondary market per se, what is it? It is nothing but a market where buying and selling of the existing securities are done. The transactions of the secondary market are generally done through the medium of stock exchange. As I said, the chief purpose of the secondary market is to create liquidity in securities. So the chief purpose of the secondary market is to create liquidity in the securities. As I said earlier friends, those who are holding the shares of ABC Limited, now if they are having a liquidity crunch, they are in need of funds, they can approach the secondary market. Now explaining you the secondary market. Now let us talk about the features of the secondary market friends. What is the single word that drives any market? Now let us go to the secondary market. Secondary market basically is trading, right? So it is trading in the already existing securities. So what is that is going to drive? Because now, as I said, if a company, if an investor who wants to sell off the shares of ABC Limited, it must be on the basis of certain information which he must have received, and he must have taken a call as to he would like to sell those shares and do his investment in some other company. So what that drives the market is the information. So information is very vital as far as capital markets are concerned. The information can be company specific, it can be a news that can come in, right? It can be the technical analysis which are being done for the price movements of that particular security. It can be external factors, as today we are a globalized market. Today when we are participating in the global market, any external factor, any person doing any trade in the US can have a repercussion in the Indian market also. So external factors and internal factors, internal information about the company and events. So these are the variety of informations that drive the market.